Our next guest thinks escalating trade tensions may be creating some isolationist behavior among travelers. Joining us now is Barclay's analyst Trevor Young. Trevor, it's good to see you. So how much of an impact is from tourism? How much is American kind of consumer slowing down a bit? What do you see?
Yeah, thanks for having me. So we actually see a variety of factors contributing to what we consider a slowdown in travel demand right now. Obviously, trade uncertainty is weighing on consumer sentiment. Hopefully we get some transparency on that tomorrow and in the coming weeks. But at the end of the day, travel is consumer discretionary spend. And when people see capital market volatility, trade uncertainty, they tend to pull back in discretionary areas like travel. And we do think that's happening right now.
Which is interesting. We spoke to a Norwegian cruise lines analyst who said cruising was relatively recession-proof in 2008 and 2001, and that could be a safer place to look this time around. I don't know if you have an opinion on that, but I guess the larger question is, what is travel telling us? And is it a leading indicator, or could it recover after we get through this tariff uncertainty?
Sure. So my coverage specifically is on the internet names, so like Booking Holdings, Airbnb, and Expedia. So I'll focus on those. And we do think it is a little bit of a leading indicator. But to your comment a moment ago, we do think actually we should wait and see how 1Q shapes up. 1Q is a key quarter for bookings. That's typically when consumers, start planning their summer travel. So as we start getting into 1Q results and into April and early May, that'll be really indicative of how consumer demand is shaping up for the rest of the year.
So Expedia, Booking, Airbnb, Trip, anything that you can glean from following what's happening there?
Yeah, sure. So we do think that, U.S. exposed names and airfare exposed names may have a tougher time for some of the reasons you mentioned before. So that would be more of an impact zone for a name like Expedia, whereas Booking Holdings is much more Europe focused. 40 to 50% of their bookings come from EMEA region, and they have lesser airfare exposure. It's only about 15% of their bookings per our estimation, whereas Expedia is more like 25% from airfare. So there's certainly some geo mix and product mix considerations here, and we do favor Booking over Expedia.
Trevor, what's going on with the airlines? I mean, they had this monster 2024. United Airlines doubled. Now it's down 30% in 2025. These are not airline-like moves.
Yeah, so I'm not the airline analyst, so I'll shy away from answering, specific to those names. But
how about this? What's going on with travel stocks? How about that, Chris?
Sure.
Because I could have thrown cruise lines in there as well.
Yeah. So look, last year, particularly in the back half of the year, we saw surprising resilience in travel demand after what we would consider kind of a growth scare in that July-August timeframe. And that just proved short-lived. And we could be going through a similar kind of growth scare right now. It's too early to make that call. It's something we're very cognizant of. But this is pro-cyclical industry. This is consumer discretionary spend, and in tougher times, this is where consumer pulls back.